The consensus among consultants is that businesses of all sizes can pave their way to success by consistently following these essential bookkeeping best practices. Handling your personal finances can be quite straightforward. Typically, you might have a couple of basic accounts like checking and savings, along with a retirement plan and some investments. Additionally, there might be several monthly bills and a designated place for keeping receipts for tax documentation. Bookkeeping and accounting for a business involve more complexities and higher stakes, especially with employees and customers depending on your accuracy and reliability. This is especially true for small and medium-sized enterprises, which can benefit greatly from the myriad of tips offered by accounting and bookkeeping professionals. Experts in bookkeeping generally concur that for a business to succeed, regardless of its size, it's crucial to follow these key bookkeeping best practices. Effective, secure CFO accounting methods to adopt for your business. Decide on the accounting method suitable for your business. Your business can choose from two primary accounting methods: cash basis accounting and accrual accounting. Cash basis accounting tracks transactions only when actual cash exchanges occur, making it a suitable choice mainly for businesses dealing exclusively in cash transactions. On the other hand, accrual accounting adheres to the matching principle, logging revenues and expenses in the period they happen, irrespective of the actual payment timings. Though more complex, accrual accounting is often the preferred method for businesses that invoice clients. There's also a hybrid option known as the modified cash basis. This approach combines elements of both methods, operating on a cash basis, but with the inclusion of accounts payable and accounts receivable, implying that you record bills and send out invoices. It's vital to select the most fitting accounting system for your business before initiating any transactions. Set up robust internal management controls. Implementing internal controls within your company's bookkeeping and accounting procedures is essential to minimize fraud risk. For activities involving payments, employ a system of checks and balances. For instance, one employee should prepare checks, another should reconcile bank accounts, and a third should authorize payments. In terms of mail handling, separate the duties to ensure the person opening the mail is not the same individual managing accounting tasks. The person responsible for mail should maintain a physical log, recording details of received checks, including dates. These checks, along with the log, should then be handed to the bookkeeper or accountant. Utilizing customizable check templates can be helpful in this process, ensuring accountability for both the mail handler and the finance personnel. Maintain a clear distinction between your personal and business financial matters. It's crucial to ensure that neither you nor your employees use business funds for personal expenses. Improper allocation of funds can lead to significant cash flow problems, complications in tax filing and auditing, and potential legal issues. This might include losing the protection of limited liability in cases of financial commingling between personal and business finances. Even in a small business where you might manage all purchases and payments, it's vital to maintain a strict separation between personal and business finances. This separation should extend to having distinct bank accounts and credit cards for your business. Such a practice not only simplifies tax processes, but also helps in avoiding mix-ups, like mistakenly using business funds for personal items like home supplies. Utilize accounting software for expense tracking. Maintaining comprehensive records of all business expenses is essential, which involves regularly saving and logging receipts, ideally daily or at least weekly. Managing these tasks without a robust accounting software system such as QuickBooks and cloud-based expense tracking tools can be incredibly time-consuming. This challenge only escalates as your business grows if you don't leverage technology. In choosing your accounting software, it's important not to base your decisions solely on your current bookkeeping requirements. Also consider the potential of each software system and technology to scale and adapt to your business's growth and the expanding needs of your back-office operations. Monitor employee time to gain insight into your business's profitability. For service-based businesses, automating timekeeping and payroll processes can significantly enhance efficiency. Instead of manually entering timesheet data, implementing an automated system for recording project costs and employee time streamlines data flow into your bookkeeping system. When payroll is prepared in your company, it can be directly integrated into accounting software like QuickBooks. This integration allows for the automatic inclusion of timesheet information. We configure the system to allocate time by economic unit, customer, or job level, enabling you to produce accurate profitability reports by tagging each specific job. With this setup, you can further Incorporate custom fields into job forms. Track the sales representative responsible for securing a job. Analyze profitability based on different criteria like industry, team, sales representative, and marketing campaign. Refine and enhance your chart of accounts structure. Many businesses utilize a straightforward alphabetical chart of accounts primarily for tracking expenses for taxation and compliance. However, a more strategic approach is to employ your chart of accounts as a core component of a management accounting tool. This approach aids in monitoring critical financial metrics such as customer acquisition costs, break-even points, and return on investment for various expenses. By categorizing your sales and marketing accounts, you can more effectively track the cost of acquiring customers. Separating your general and administrative expenses allows for a clearer view of the baseline operational costs, like what it takes to simply keep the lights on. Additionally, delineating product or industry-specific expenses can highlight discretionary costs that can be reduced during economic downturns. Rigorously oversee your accounts payable and accounts receivable. Maximize the utility of your available cash by meticulously managing your accounts payable and accounts receivable. Ensure timely payments of the correct amounts to steer clear of late fees and capitalize on early payment discounts. Issue invoices without delay, and diligently pursue overdue accounts to minimize the day's sales outstanding. Regularly download banking transactions and diligently reconcile bank statements, promptly addressing any discrepancies. Stay on top of your bank statements instead of allowing them to accumulate. Consistently balance them and swiftly address any irregularities. Allocate time to scrutinize your statements as soon as they arrive to ensure there are no unauthorized transactions. Remember, business bank accounts are subject to stringent regulations, limiting the time frame for rectifying errors in electronic transactions or reconciling discrepancies in cleared checks. Conduct monthly assessments of your financial data. Transform your back office from basic bookkeeping to advanced management accounting by utilizing your financial statements, management reports, and key performance indicators, KPIs. Develop a comprehensive monthly reporting package that provides insight into the key factors influencing your business's performance and profitability. Strategically prepare for taxes. All year round, maintain regular communication with your tax accountant to ensure you're properly recording and tracking expenses. This proactive approach guarantees that when it's time to file taxes, all necessary documents are already in order. Organized tax management not only streamlines the filing process, but also aids in making informed decisions throughout the year to minimize your tax liability and prevent expensive penalties. Maintain accurate and detailed records. Regarding tax compliance and audits, it's important to know that simply filing your taxes doesn't mean you can discard old records and begin anew. The IRS has established guidelines for durations for which businesses must retain various documents, including tax returns, expense receipts, applicant information, payroll tax records, and operational records. While the typical recommendation is to keep these records for a minimum of 7 years, the exact requirements can differ based on different criteria. Consult with a secure CFO consultant on a regular basis. Maintain a running list of back-office queries and periodically consult with your accounting or bookkeeping firm, not only during tax season, for guidance and solutions. This approach not only prepares you for year-end tax readiness, but also helps in steering clear of significant financial missteps throughout the year. Elevate your back office from simple bookkeeping to comprehensive business management mastery with Secure CFO. Secure CFO tailors its bookkeeping services to align with the evolving demands of your expanding business. Our foundational service packages are designed to establish robust bookkeeping and accounting practices, utilizing the finest technological tools to aid in monthly tasks. These services are scalable, extending up to a comprehensive management accounting solution. This includes a dedicated team of bookkeeping and accounting experts managing daily, monthly, and quarterly responsibilities. A well-structured back office equips your business to anticipate and counteract risks and market challenges, enhance operational efficiency, refine pricing strategies, and boost profit margins, paving the way for sustained success. Speak to a Secure CFO specialist today.